Hello, I'm Jeff Tennant. Today's May 23rd, 2015. For over a week, I've been looking for a top in this general area and to drop into the 2080s at least. Friday's action was the right direction, but certainly not enough magnitude at this time. We now have both positive and negative indicators. Typically, when that happens, one of two things happen. One is we close basically unchanged the following day. I think that's extremely unlikely because of the narrowness of the range of Friday's trade. Usually when you have an extremely narrow range like this, you get a large range day when the market reopens. The other thing which can happen when I have positive and negative indicators is that we have a gap outside of the day's range. So we have a preliminary indication that we should get a gap outside of the day's range and a large move. The question is which direction. There are some positive indicators. Early on, mejt said ultimately lower prices would print, which they did. It now says that this drop is a false move and gives us a target of 21.3170, most likely to print when the market reopens on Tuesday. Let's not forget that when we have a target close to a trend extreme, the odds of failure increase. Another positive sign is that we have a wall of selling into the close. No pullbacks of any kind, just unrestrained selling. Another positive thing is a close at the exact low of the day. In general, this indicates a get me out at any price indicator. Make that attitude of retail customers. It's unlikely that professionals would wait till the end of the day and then sell regardless of the price. Each of these things, the wall into the close and the close at the low of the day, tends to be followed by a gap up when the market reopens. There's a greater chance of failure when this happens over the weekend because people look at this and they get scared. But in general, you want a gap up when you see something like this. Well, those are the positive signs. How about the negative ones? Here we have 3 days in a row where the market hits a new high and can't hold on to it. That's a pretty negative sign, but you really have to close under these lows for absolute confirmation. I don't have any idea if this is the right count, but at least it is a possible count. And if so, we have A, B, C, D with some interesting Fibonacci relationships. If that really is wave A, then here's B. You just ignore this spike, and here's a 61.8% level. If you then look at wave C, you can see it's pretty much at 50%. Here's the height of D. It's pretty much at 23.6. And if that's all right, and that's wave E, you've got 23.6 and 3 waves. So there's reason to believe that we could have completed an ending diagonal triangle in wave 5. So we have a very interesting open Monday. I'm looking for a gap outside of the day's range and a large move. Regardless of what happens Monday, I think the market is in trouble here. While the SPX is hitting new highs, trannies are hitting new lows, and the percentage of stocks with favorable patterns has circled the drain for over a month. So I'm looking for a gap and a large move, and we should know by the open which direction that's going to be in. And that is today's call.